In this video, I want to talk about the stocks I'm monitoring right now because it's earnings season. A lot of companies are reporting earnings and there are a few candidates, a few stocks that I want to buy. So obviously I want to monitor their performance, the reports. I will monitor everything and maybe I will buy some things. A lot of stocks are on my watch list. A lot of stocks I have never mentioned them on my YouTube channel. So I'm sure you will get some value out of this video because we'll talk about specific metrics, specific KPIs, what I monitor for all companies, right? This is a very intense week. I'm recording this video. It's Monday night at midnight. So depending where you are, when you are watching this video, it will change. But in a few hours, it will be the close of this market for Monday. So Palantir will report earnings, Hims and Hers will report earnings, and when I publish this video, they will have already reported earnings. Okay. Spoiler, I am not monitoring Palantir or Hims and Hers. I couldn't care less what is happening with these companies. These are not on my watch list whatsoever. I'm much more interested in better quality companies at a reasonable valuation. Investment cases that are much more simple, that Hims and Hers and all the regulatory problems they have, or Palantir and the excessively expensive valuation. So yeah, in this video we'll talk about specific companies I'm monitoring that I want to buy in the future. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. 25% per year, investing in quality companies available at a fair price. And the way you do it is very boring, but it works because it's inspired by Warren Buffett. You monitor a lot of companies, you buy a few companies. You have a concentrated portfolio with a high quality portfolio. High quality companies, high quality stocks. So, in this week, I have this table here. What are the companies I'm monitoring? Well, the microphone is disappearing. Okay, it's funny. What are the companies I'm monitoring here from this chart? You have big companies like Uber, Shopify, Spotify, very interesting companies. I will monitor here Spotify. Okay. On Tuesday, I have to monitor Spotify. Spotify is an extremely well-run company at an expensive valuation right now. It's a company that is turning the profitability on. They are now generating free cash flow, which is very bullish. What will be the next leg of innovation for Spotify? Can they continue to increase the free cash flow generation now that you have a change in leadership? It will be pretty interesting to see this actually. What is the next leg of innovation for Spotify? Another company I'm monitoring is Ferrari. They just announced their analyst day. They just announced a guidance for 2030, and I made a video about this. You can check on my YouTube channel. The guidance was bad. The guidance was bad. The guidance was disappointing. They expected a growth rate of what, 6%? 7%? I mean, come on, you are Ferrari. You can increase your prices by much more than this. So they backed off from EVs. They focused on normal cars and they expected the growth rate of 6-7%. What will they do during this quarter? Will they upgrade their guidance? Will they focus on margins? Will they focus on growth? Will they highlight new pricing power? I want to check this. Okay, so very interesting for Ferrari, but now the stock is no longer is not cheap at all. Guru Focus Race. The PE ratio for this company has always been trading at 40. Yeah, forward PE ratio of 33. If this is a business that grows at 6% per year, Ferrari is expensive. Ferrari is not a buy right now. What if they report earnings? The stock drops 15%. You will have a PE ratio, forward PE ratio, less than 30. In this case, it's interesting. Okay? In this case, if they continue to drop, it's interesting because now the stock is 25% below highs. If it drops meaningfully, it's a quality company after all. So if it reaches a fair value, I might buy it, actually. I might buy it. And the threshold for valuation is very strict. I have a big discipline when it comes to valuation, and this is not something I talk about on my YouTube channel, but I monitor plenty of companies. Most of the time, the valuations are too stretched, and I have generated 25% per year, okay? To make 20% per year, you must buy quality companies at a very good price, like the golden scenario of having the perfect company, perfect valuation, you cross-read everything, and you buy at a sweet spot. Ferrari right now is maybe the perfect company, high quality, pricing power, but the valuation is not perfect. So you will not be able to make 20% per year. Fun fact, right now as I'm recording this video, the performance is 20% for 2025, a little bit more than this because you have to account for today's gains, while the S&P 500 is up 16%, 17%. So still outperforming the market even for 2025. So I'm in line to reach my 25% per year for this year. You have 2 months that are normally very bullish for stocks. So very happy with the performance so far, and I don't want to mess the performance up, which means I will not trade the earnings for Ferrari. I'm expecting bad things for Ferrari actually. I'm expecting a drop from the stock price because of not because of the financials, but because of comments from the management team. I'm expecting bad stuff. Maybe I will make a video about this, but this will be controversial. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Next one on the list for Tuesday, I don't follow AMD. I will monitor Arista Networks. What a beautiful company, right? Anet is a wonderful company, and they are riding the wave of the data center build out, the big capex expansion. Right now, the forward P ratio is 47, so the stock is expensive. This is a quality company, wonderful compounder, expensive. So I will not buy it, but I will monitor it to see if the data center build out project is still in full force. Then you have a couple of corrupt companies that have fake numbers like Supermicro or Beyond Meat. These are meme stocks. I will not even mention these ones. And you have here Upstart. Upstart doesn't get a lot of coverage on YouTube. It's still an interesting company, and I am monitoring Upstart to cross-read things with Fair Isaac, FICO, because I'm monitoring FICO very deeply, and Upstart is operating in the same industry, mortgage originations. Upstart is creating an AI score, an equivalent of the FICO score, to judge whether somebody has the right to have a loan or not. And and Upstart has been using AI for years, and they want to focus on people that have no credit mortgage history. Like, if you are a young person, first job, entry-level job, you don't have a house to your name, how can you judge if you have a good score or not? Well, instead of, if you look at the FICO score is determined whether you have paid your mortgage in the past, whether different metrics. Well, Upstart is using the location of your neighborhood, for example, or your job you have. Okay, so different metrics, different score. I want to check what they have to say about the industry overall, the mortgage origination market, because now interest rates are going down, so people will take more debt. If people get more debt, they will tell you. Because on Wednesday, FICO, Fair Isaac, is reporting earnings. Okay, so you want to cross-read this. Look at this. Fair Isaac, this is this company. They report earnings November 5th. Okay, so on Wednesday. And my strong guess is, depending what Upstart says, FICO will move a lot. If they say There is a strong rebound. A lot of people are taking more loans. We see strong demand. People that were waiting for interest rates to drop are now getting to the bank and asking for more loans. It's very bullish. Fair Isaac will go up. And if they say the mortgage origination market is still weak, Fair Isaac will go down. There is another thing that you want to cross-read, which is the traction the Upstart score gets. If you have more market share, because that's a big headline, Fair Isaac will drop. And this is not the first time Upstart is attacking FICO directly. I was invested in Fair Isaac in 2022. And at the time, the biggest risk was not the regulation. The biggest risk was not Bill Pulte. The biggest risk was not price gouging. No. In 2022, the biggest risk was Upstart. And nobody remembers this. I was there. Okay? This is also the reason I'm making 25% per year. I'm here when you have to fight. And nobody was talking about Fair Isaac in 2022. And I made a fortune out of the stock for exactly this reason. At the time, Upstart was a big competitor, a big threat, and the Upstart had a PE ratio of 200. Completely ludicrous valuation, completely crazy. But people were saying there is no price too high. Upstart is eating FICO alive. Upstart will rule the world because they use AI, they have better score, better algorithms. Now they are burning cash. They have cheated on a lot of things, adjusted all the numbers. They are not getting any traction. And you have a few partnerships with some banks, but you don't have a lot of traction. FICO is still the best. But at the time, the FICO was down, and you had plenty of articles from Seeking Alpha, for example, articles saying Upstart will rule over the industry. Well, you still want to cross-read what they say because it's the same industry, right? Okay, so also I want to see Fair Isaac that is reporting on Wednesday. You have plenty of things that are happening. I may be expecting an increasing guidance for FICO. I don't know about the guidance for next year, but maybe because of the new pricing model, they will have to update their guidance because FICO is taking a new direction with a new business model. Instead of going through the 3 bureaus, they are going directly to the customer, which means you can have better margins, which means their biggest segment, the score segment, right now they have what? 87 EBIT margins. You can go to 90% EBIT margins, operating margins. Can you name 10 businesses with 90% operating margins? No, you can't. But FICO is doing it. So maybe they will have to update some numbers. I'm expecting a strong quarter, a big move for FICO. And if the big move is down, I will buy. I'm telling you, I will buy. So if the stock drops meaningfully, I will be here because I've done the work. I mean, I've been studying FICO since, 2020, 2021. So 4 years. I was a shareholder, went all the way up, and I want to get back in. Now the stock is a little bit too expensive for me, but I want to monitor everything. All the retention rate, all the price gouging, all the traction, all the new Vantage Score competition, the guidance, the expected price increases for next year and future years. And also, this will be the first quarter with the first earnings call with a new business model. So I'm sure, 100% sure, they will have to explain how this new business model works. And if you don't know what I mean, I made a video a couple of days ago about Fair Isaac. It's a complete video about this new business model when they want to cut the bureaus and go directly to the customer. Okay? Okay, so that was for FICO. Next one here is Axon. Axon, taser company. I've been following the company for a few months now. High quality compounder. But you have two big problems. The forward PE ratio is 90. And the CEO loves money. you have huge stock-based compensation for this one. Huge stock-based compensation. If you look at the net income, this is in green here. You see the net income in green? Well, you see the stock-based compensation in pink. Stock-based compensation means the stock options, the salary that management is taking for themselves. The salaries, the stock options for salesmen, well, they just have an immense amount of SBC, and I hate to see this. They are diluting the shareholders, and the price is too high. But still, I am monitoring the situation because the revenue is growing 30% per year. Exactly like companies like Mercado Libre. These things continue to grow. These companies continue to grow at a very good pace, and the TAM, the total addressable market, is huge for this one. It's a company, they do the body cams for police officers, and also you can store all the data, all the footage, all the videos on a cloud, and you can store all these videos for years and years. So they are building an ecosystem selling the hardware, the camera, right? But also the software. First, to analyze the data of the videos, okay? And two, to store the videos. Like a big Dropbox, a big cloud, and you can store the videos for years. In case there is a problem and you go in court in 5 years, you will have access to the videos, right? So it's a subscription business model, and it is growing wonderfully. At the same time, they sell tasers, so non-lethal weapons. Before, the company was called the Tasers, so this is why. Yeah, pretty interesting, and I want to follow. I will not buy it right now, but I'm just following it. Because if you have a recession and the stock drops for some reason, I will buy it. It's one of the few companies that have such a high quality, I'm willing to pay up. Okay, Pinterest, I couldn't care less. Let me continue. Wednesday, you have a few big companies like Novo Nordisk, McDonald's that are reporting earnings. I don't want to be invested in Novo Nordisk. I've been following the industry, but it is in my too hard pile, so I will not touch it. Humana, no. Same thing. I've been following Humana for 5 years now. Too hard pile. I'm still following, but from a distance. McDonald's, of course, you want to cross-read this, how the consumer is consuming. Well, if the consumer is in shape or not. You want to cross-read this with Domino's Pizza or Chipotle, McDonald's, or all the Starbucks, or all the fast food restaurant, QSR, all the fast food industry. You want to see if the customer is good, is in good shape. You want to check if inflation is here. You want to check if they are doing discounts, because the lower class and middle class are suffering more because of inflation. So yeah, they are doing discounts. Now you have like $5 meals. For McDonald's, this is quite new, and they are increasing their prices for their burgers and French fries, etc. So yeah, you want to see if the consumer is in shape, especially in the US and Europe. And yeah, just this following from a distance. I don't plan to buy McDonald's, but that's one of the safest company you can have for the very long term. After the close, you have nothing that is of interest to me. I don't know when my companies are reporting. My companies are Fortinet and TPL. They are both reporting on Wednesday, and I don't know if that's before open or after close. I don't care much. I mean, I'm based in Asia, so the time means nothing here. I would just look at it on Thursday. Okay, so Fortinet is reporting here November 5th. TPL is reporting here November 5th. What you want to check for Fortinet is the hardware. Refresh in a firewall hardware. Analysts will kill Fortinet if they miss. Because Fortinet missed expectations last quarter. The stock fell 30%. I bought at this moment, by the way. And you want to check this. You want to check AI implementation. If their AI products that are growing 30% continue to grow at 30%. You want to check the amount of buybacks they have done. I made a video about this. I'm expecting a buyback program of minimum $1.4 billion they have done this. What if they do more? What if they do 1.6, 1.7? You want to see if there is any traction for hardware and software and the amount of buybacks. You want to also check the margins. You want to check the capex because now they are building their own data centers. So maybe what is not priced in for Fortinet is that the capex is going up for this company. If the capex is going up, it will lower the free cash flow. So maybe analysts in 2 days will say that the free cash flow is lower than expected. It's quite bad. Well, it's normal. People are not expecting this, but this is normal. This is the way the company is doing business now. They are increasing their capex. By how much? I want to see. And actually, I hope Fortinet disappoints. I hope the hardware segment disappoints immensely because I want to buy more. So what if the stock drops from $85 per share to $75 per share? I will buy. I'm a shareholder of Fortinet, but I want to accumulate as many shares as possible. So if the stock drops, I'm very happy because I will buy more. I will buy a lot more, I think. And if the stock goes up, that's fine to me because I will continue my outperformance to the market and I will have a good year. So it's a win-win situation for me. If the stock goes up a lot, I'm happy. If the stock goes down a lot, I'm happy. I will buy more. Okay. And the second one that I will follow on Wednesday is TPL, Texas Pacific Land, my favorite business of all time. I've been a shareholder of this company for so many years. I bought in 2020 and I sold at the absolute top. I made 8x. I multiplied my wealth by 8 because of this investment. And it's a company I've been following for years and years. I know this company quite well and I want the stock to go down. I want the earnings to go up. Now, if you look at the oil prices, it's down. They are down. TPL, in case you don't know TPL, Texas Pacific Land, it's a oil royalty company in Texas. And also now a water management company. But it's about royalties, asset-light business models. An asset-light business model, sorry. And during this quarter, the price of oil went down, which means the growth rate for TPL will not be great. The only way they can increase the revenue is by increasing the amount of volume from oil and water. This is exactly what they have been doing for a few quarters now. You can go back to the second quarter of 2025. Oil prices went down, but the volume went up. So it's a game of production right now. Maybe they will do the same, which means the growth rate will be what? 10%? And the stock will do nothing. What if the stock crashes? It will be pretty interesting. Second thing I want to monitor for TPL is a few days ago, they took some debt. They took $500 million of debt. And I hate to see this. I've seen nobody on YouTube talk about this. This is why I'm making this video. For the first time in a few years, they are taking debt on their balance sheet. As you can see here, TPL has no debt. They are famous for having no debt. And now, a few days ago, they took $500 million worth of debt. $500 million to do what? They did not disclose this, but I suggest they will do acquisitions. They will make some acquisitions. And I hate to say this because the management team has been horrible when it comes to acquisitions. I think the management team is really bad for TPL and I don't want them to have power. I don't want them to make stupid acquisitions. I think they are pretty poor capital allocators. And if you don't believe me, you can go back to 2023. What has happened with the lawsuit in 2023? They wanted to multiply the number of shares by 6. Let me repeat in case that's not clear. The management team, the brilliant management team of TPL, wanted to multiply the number of shares by 6. They wanted to make a stock split and they wanted to use their shares to make acquisitions. They wanted to dilute the shareholders, like me. I was a shareholder at the time. They wanted to dilute me as a shareholder to make stupid acquisitions. They are they are a royalty company. They have maybe one of the best pool of set of lands you can have in Texas. But they want more. They want to diversify for some reasons. Well, hopefully for us, what is great is the biggest shareholder of TPL is Horizon Kinetics. That's a fund, and the fund is handled by Murray Stoll, and he has been a superhero for TPL. He has first bought TPL in 1995, so he knows the company quite well. That's the most expert guy maybe there is on earth when it comes to TPL. And every time TPL wanted to make something stupid, Horizon Kinetics comes and intervenes to stop the management team. Because the management team is so bad, you have to monitor them like a baby and say, no, don't do this. So in 2023, Horizon Kinetics went in court with TPL. They fought against for capital allocation decisions. And this is the reason why we were not diluted as shareholders, because Horizon Kinetics defended our interest as shareholders. Okay, so TPL is not a very easy story to understand. You have to go back to the roots of the companies to check the track record. So it is very bad to have new debt because they have finally found a way to make stupid acquisitions. And I hate to see this. A few quarters ago, they made acquisitions with cash. I didn't like this at all. Well, it seems like they want to continue. I mean, they didn't say they wanted to make acquisitions, but it's very unlikely they do leverage buybacks. You have a P ratio of 40, so it will be dumb. What can you do with your debt? Dividends? What a stupid way to burn cash. To take more debt to pay dividends. Stupid. Or to make acquisitions. I'm pretty sure of what I am saying here. They will make stupid acquisitions and maybe they will have to fight. So if you go back to the track record of the company, 2023, the management team was horrible. You had some people that were fired from the board of directors. And yeah, pretty ugly scenario. TPL is such a crown jewel. It's such a gem. You don't want to touch it. You want to keep your assets, keep your lands, generate as much cash flows as you can. When the stock is cheap, you do buybacks. And when I bought TPL at the time in 2020, the stock was cheap. The company was generating a healthy amount of free cash flow. And they were also selling a little bit of lands to farmers. You sell unproductive lands to farmers to raise cash, and you use this cash to do buybacks. So it was the definition of a cannibal company. They were selling assets, selling part of the company to do buybacks. They are eating themselves up. And now as the valuation is going up, the management is not doing any buybacks, which is smart if the valuation is high, right? And they are doing dividends at the time, and now they focus on acquisitions. They want to dilute shareholders. They can't because you have a superhero that is defending everybody. So they are taking more debt to do acquisitions. And maybe on Wednesday, they will announce the new debt and announce publicly their plans of making acquisitions in the future. I will hate to say this, but that's also my job to monitor the bad things, so I can make an informed decision to buy or not to buy TPL. Because after all, the goal is to continue to make 25% per year. Depending on the capital allocation decisions, this will impact the performance. This will impact the performance in the future, like 20% per year, 25% per year. It will be pretty important. You want to be aligned with the vision of the management team. Okay, so that was for TPL for Wednesday. Next one on Thursday, what do you have? Vistra Energy. It's a energy play in the data center build-out story, so I'm following it. It's a company I want to buy actually, Vistra Energy, but it's a capital intensive business, so I don't think I will buy right now. And if the data center build out growth is slowing down, Vistra will be affected. But now you have a big bottleneck when it comes to AI. This is energy. So Constellation Energy, Vistra Energy, Talent Energy, all these ones will benefit enormously from AI if the AI hype continues, right? What else? You have Open Door, no Archer, no DraftKings, no Airbnb, no. And on Friday, nothing really big. Yeah, you have Brookfield Asset Management, but this is a sleep well at night company, so you want to monitor from a distance, but everything will be safe. Okay, so these were all the companies I'm monitoring for this week. Really looking forward to seeing all the reports. I will maybe make a video about some of them. I hope you liked this new format, and I wish you a nice rest of your day. Bye-bye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.